You guys have no idea. You guys have no idea how hard it was to make this whole freaking video without busting out laughing. I remember I started it and I was like, oh man, I gotta keep it together. I was trying to make it this straight up, literally just me eating a sandwich, but oh man, that was tough. Either freaking way, what is up, everybody? Welcome to Trades. We have technical analysis on different stocks in the stock market, as well as potential buy holders sell opinions on these given stocks. I'd like to preface by saying that I'm not a financial advisor nor expert, so take what I say with a grain of salt. Let's get into the video. So today, we're going to give you guys an update on ticker symbol AMC, obviously, and I'm actually going to be going over a couple different things here. So I want to go over the data, the numbers for here today, and then I want to come into AMC and do a little bit of technical analysis for you. I want to talk about the Federal Reserve printing off a lot of money for the stimulus package and how that's actually going to affect AMC and the market as a whole. And then I want to take like 3, 4, 5 minutes at the end of this video to go over technical analysis, right? I want to teach you guys exactly what I look for in terms of technical analysis, so that if I'm not here, if you know, there's obviously way better resources than me out there to look this sort of stuff up, but I do know a decent amount about how to read charts, so that if I'm not here, right, you can read charts yourself and know exactly what's happening with the stock, the price action, what to look for, what not to look for, what matters, and that sort of stuff. So let's just get into the video, save you guys some time. We're gonna start off here with the data that is going on here with AMC, right? So I've got our text pulled up, and this is the second day in a row that we've actually seen the short interest go down, right? So yesterday it was down, I think, like 3% or so. You saw a little less than 5 million shares that were actually returned overall. So the short interest went down, right? And today you have about 2.06 million net borrowed change, which means that there were 2.06 million more shares that returned than were borrowed, which means that the short interest went down to about 22.94%. Remember, this does not include ETFs. This does not include naked shorts, which I really do highly believe is taking place. The only reference point that I have for that is coming back to, the only reference point I need, I should say, is coming back to 1.2 billion in total volume on January 27th, back when we had about 150 million shares total of the free float that were circulating the market, right? That would mean that you'd have 8 times over the free float changing hands, which I just don't think is possible. Anywho, this is still an insignificant number. I'm going to double down on what I said last time, right? This is not going to change the grand scheme of things. If you stack, today and yesterday up 1, 2, 3, 4 weeks in a row, at that point, I'm a little bit concerned, right? Because then you're taking away the chance of a short squeeze. But 2 days in a row of this is really not that important. And I say that because you need to look at the overall grand scheme of things, right? Days to cover has been going up dramatically for a very, very, very long time. Think about it like a stock, right? So if a stock was just going to rip, up and up and up and up and up over a 2-3 week period of time, eventually, it's got to cool off. It's got to do a little bit of a correction. It's got to pull back. And you're seeing the same thing happen right now in terms of short interest. They're taking a little bit of a breather, right? They're returning some shares. And some people have asked the question, Trey, why does this not reflect on the price action? And I really try not to say this word on YouTube anymore, but I really do think there's some sketchy stuff happening in terms of market manipulation. And nobody has an answer for you, right? All we can do is speculate. But it is incredibly fascinating that you have 5 million shares that were returned yesterday, 2 million shares that were returned today, and the stock only went down, because that doesn't really make any sense at all. If any of you guys have an idea as to what this is, feel free to let me know your hypothesis, your speculation, but I genuinely can't think of anything. The only thing that I can think of is maybe you've got some lenders out there who are asking deliberately for their stock back because they think it's a risky short position. That's the only thing that I can think of, right? But also keep in the back of your mind this. Overall days to cover is going up 1.16 on the short interest divided by the 3-month average volume. On the 2-week average volume, it's down a little bit again. We see it at 3.63. Day before it was at 3.73, but that's still incredibly high. It's higher than when we saw the squeeze up to $25, which means this is still very, 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 very primed for a good short squeeze. But what I want to talk about is this. You've got 150 million total shares on loan, 100% utilization, 36% of the shares on loan make up the free float percentage, right? That means that 36% of all available shares to the market are currently lent out, right? 23% of the actual shares out on loan are only being shorted, which means that there's a little bit of a discrepancy here, right? So if 150 million shares are out on loan, and you saw previously there was only 93 million total shares that were actually shorted, that means they actually have availability to another 60 million shares that are simply being lent out, right? So this utilization being maxed out just means that there's no available lendable shares. However, 150 million total shares on loan, and you had 93 million total actually shorted shares, and on here it says 95.85, so it's actually up a little bit, but then that leave about 50 million total shares, so they still even have ammunition, right? So them returning 2 million shares doesn't mean jack. It doesn't mean anything. In the grand scheme of things, this is just giving more availability for them to double down when they continue to want to do so, and I do think that's going to happen, right? Take a step back, look at this macroscopically. It's an overall trend. It's a chart. It's the market, the ebbs and the flows. It's that simple, right? So we're sitting absolutely fine. The short interest is still absolutely absolutely disgusting. I mean, you look at GameStop, and I don't even think GameStop's short interest, it maybe is a little bit better than this, but it's not by a lot. So just take a look. It was at 23% over here, just a hair under that. GameStop is at also 23%. So they're both sitting in the same spot. Free float on loan for GameStop is actually lower, and the utilization for GameStop also lower. Short interest on GameStop actually went up today, but you get the picture, right? Both are sitting in almost identical positions. So AMC is sitting fine because GameStop is absolutely squeezable, which means that AMC is also absolutely squeezable. So I'm not stressing over these numbers. Slight change right in the downtrend, but look at this like a chart and you're going to be sitting absolutely fine. There's ebbs, there's flows, there's ups, and there's downs. We're going to get back into that territory where they continue to double down on their positions, which is just going to hurt them more. One other thing that I want to touch on is going to be that short borrow fee rate. So what attributes to this? We talked about this in my Discord today, and there were some questions. I've talked about it before on the channel, but in case you're new, I always assume there's somebody new. The short borrow fee rate essentially goes up or goes down in correlation with the risk of holding a short position, right? So this is basically incentive to short positions to cover and not to hold a prolonged short position in a security or a stock such as AMC, right? So now it's sitting at 13.43% according to Ortex. If you look at iBorrowDesk, it's sitting at 16.2%. This takes different exchanges, right? I think Ortex uses about 85% of all current exchanges that give data to different data sources like this, right? So this isn't even a complete picture. Maybe that's why iBorrowDesk looks a little bit different. I don't know for sure, but either way, this is going to go up and it's going to go down depending on, I think, two factors right now, right? So since the utilization is maxed out, there's no more really lendable shares out there for people to borrow. There's two ways this can go. Either A, they scoop up all of these shares that are out on loan, right? Free float on loan, 35.92%. This matches, right? So as this continues to go up and this stock becomes harder and harder and harder to borrow, that short borrow fee rate is going to continue to climb. And secondly, is going to be buying pressure. So anytime the stock price goes up, that increases the risk of an overall short position, which is going to drive up this cost to borrow. It's going to make it a riskier investment. They're going to put pressure on short positions saying, hey, you can take this if you want. You can take a stab at this, but just know we're going to charge you 13.43% annually on whatever your short position is. So it costs them money. This is where the saying comes from, right? It costs us nothing to hold. It costs them everything to hold, right? So we are sitting in a much better boat than short positions are right now because there's absolutely no risk to us until we hit that sell button, right? So that's kind of what that cost of borrow is attributed to, and that's why it's been going down, right? You look at iBorrowDesk, you can see that it has been trending down over the last couple of days, and this is directly because the stock price has been going down, right? It's not a coincidence. You need to look at trends in the overall market, and you can see that that is a trend that is in fact taking place right now. So that's what you're kind of looking at in terms of the cost to borrow going down. That's why you're looking at the available shares. They go up and down, but nonetheless, that's the overall trend that you're seeing as of right now. Now, you look at the daily short sale volume ratio, right, the percentage. You can see that yesterday we actually saw 43% of the overall volume was short volume. So this is starting a little bit of an uptick again, right? And I believe this is because you've seen some of the shares that were being returned. So it's very possible, since over the last 2 days we have seen shares returned, that you continue to see this number start to go up over the next 1 or 2 weeks, and that short volume percentage will start to go up once again. So that's kind of what you're looking at right here. We did see 43%. This is lagging a little bit. I don't have the data for today, but you will get that tomorrow. I'll get that out to you. You can take a look at what we're looking at. But nonetheless, this is obviously still being a very heavily shorted stock. And you can see there's kind of a support level right here where we always have at least 30% of the total market volume as short volume. Keep in mind, you can't even short this on Webull or most brokerage accounts, which means that this shorting must be institutional investors. I just don't see any other way, because this has been a hard to borrow stock since freaking January, which is nuts. It's hard to believe I've been playing the game that long, but you get the point, right? Institutions are still shorting the stock. We're still trending in that right direction. That's what you're looking at in terms of the numbers here today. Now, I kind of want to touch on a couple other things, then we're going to get into the technical analysis. But if you look at the overall market and what was really ripping today, you can see that the SPY, and I'm going to show you really quick. I'll show you the SPY really fast. The SPY actually had a slight green day. In the after hours, it's down a little bit, but it sold off immediately at market open, lasted up until about 12:30, and then it recovered to form this neckline, right? So it didn't get that break back up to new highs intraday, and it just ended up forming this neckline and having this slight sell-off in the after hours. And you can see that this really well lined up with AMC, right? So the reason that I'm bringing this up is because if you look at the SPY overall, let's just look at the overall trend of the market that we've seen going on over the last couple of months. You can tell that any day that the SPY or the overall market is having a little bit of a rough patch, it doesn't know what it's doing, the uncertainty, right? That AMC reflects on that price action, right? AMC will also have a little bit of uncertainty. So the entire market as a whole having some uncertainty, not really knowing what direction it's going, is playing directly into the hands of every stock in the market, and that includes AMC. Keep in mind that AMC makes up ETF funds, right? AMC is a part of a lot of different ETF funds. So if those are having rough days, consequently, AMC could very well go down. So that could be contributing to the overall price action that we are seeing on AMC. And I lastly wanted to talk about this. Stimulus money. Now, why does this matter, right? So I kind of want to take, this is one guy's opinion, right? Don't take this at at face value, take it for what it is. But I believe that you are going to see a pretty large amount of inflation, maybe not this year, but over the next 2, 3, 4 years. And I want to tell you why, right? So there was $10 trillion in 2020, part of the economic stimulus by the Federal Reserve, which I do think we needed to have at the time. That's an entire different topic. But this was sent into the market. And this was probably the most money that has been printed by the Federal Reserve in a very, very long time, if not of all time, right? $10 trillion is a lot of freaking cash. Now, what does this mean in the grand scheme of things? I was talking about this in my Discord before I, made this video, and we were talking about what this means for the entire market. And why I think this is important for AMC, I'll get into here in a second, is because it's going to be really hard to beat inflation, I believe, over the next 2, 3, 4 years if everything comes to fruition, right? So let's just look at the SPY right now. SPY over the last year. So let's just look what the SPY's done over the last year. You can see that it was at $272 and has gone all the way up to $420 in the last year. Now, keep in mind that that was after the crazy crash that we saw back in March, but that is an incredible, incredible, incredible amount of growth. Well, why is this? Because you have two different factors playing into the stock market right now. You've got the Federal Reserve, which printed $10 trillion, and you've got quarantine and COVID, which brought new money into the market, which caused this rapid bull market that we have never, maybe not never, but haven't seen in a very, very long time, right? And I believe that some of these gains are kind of an illusion, and I'm going to tell you why. So let's just say that the SPY and the NASDAQ, the typical amount of growth that you see year over year over year is somewhere between 6 and 10%, right? This year, you saw on a 1 year time frame, let me just look at this again. You saw it go from $272 at its low to $420. So if you were to double up 272, that would come out to 550-ish bucks, 540-ish bucks, right? So you saw some significant growth, and that beats very, very blatantly the usual growth that you would see out of the SPY. I mean, just look at this 1 year time frame, right? $339 compared to $259, a year before that. So that is some exponential growth coming out of the SPY, and I believe it's because of those two factors, right? New money coming into the market and the $10 trillion. And why I think that $10 trillion is important is because inflation inevitably, in my opinion, is going to go up. And that means that the actual gains in the market were not as much as you truly thought they were. I mean, think about how much money this is. Look at this. Check this out. 2020, $10 trillion Federal Reserve stimulus package. This is how much space in $100 bills it would take to lay out $10 trillion. Look at this. 0, 100 million, 200 million, 300 million, 4, 5, 6, 7. It just keeps going and going and going. You get the picture here. It's an insane amount of capital. 3 kilometers it would take to lay out how far this goes, right? I was reading that wrong. My apologies, but you get the picture. It's a lot of cash. So the market ripping the way that it is right now is actually just barely, maybe it beats inflation by a little bit, but a lot of the gains are synthetic. They're not real, right? You're just basically catching up with what the economy is going to do in the long term. So where does this come into the equation with AMC, right? So I had a hypothesis that I worked with a fellow member of my Discord. His name is Uranium Potato, and it's what is going to happen to the market after AMC moons. We came up with this, right? So you've got some really major hedge funds, institutions that are shorting the stocks like AMC and GameStop. And when these squeeze, I think two things are going to happen, right? You're going to see a lot of short positions get covered, which is going to cause the stocks that are heavily shorted to spike, have crazy run-ups. Think back to January. You saw Nokia, BlackBerry, GameStop, AMC, Cost. There was just a handful of really heavily shorted stocks that went absolutely apeshit. They went nuts, right? And on the flip side, I think you're going to have this happen. You're going to have some blue chip stocks. You're going to have some really well-established companies that essentially the same hedge funds that are shorting these stocks probably also have long positions in other companies that get liquidated. And what's going to happen there, right? Well, what'll happen there is those stocks will likely take some pretty big plummets. And what I think about is Viacom and Discovery. There was another stock here recently that had a really harsh sell-off. I can't think of what it was, but you'll have something like this, right? A lot of retail investors in here inevitably got screwed, and it's sad to say, but it's the truth, right? $100 drop all the way down to $37.59 is drastic, and I find it very extremely likely that you see this happen. Now, how does this tie into the $10 trillion piece that I just talked about, right? So if hypothetically speaking, all the gains that we saw, over the last year played in part because of, new money coming into the market and $10 trillion being printed out by the Federal Reserve, a lot of these gains are illusionary. So if you're holding long-term positions outside of stocks like AMC or GameStop, some of those gains gains, if you're not careful, could not only be lost, but inevitably really fall behind inflation over the next 2, 3, 4 years. So this kind of brings me to an overall point. And like I said, this is a guy's hypothesis. This is just me rambling, thinking about some different stuff that I thought was interesting. You guys let me know what you think. But this brings me to the idea where you definitely want to manage your risk levels and make sure that you've got stop losses set on your long-term positions, right? So just because it's a long-term position doesn't mean you need to hold it forever and ever and ever and ever and ever, right? Microvision, for example. Microvision, my girl Mavis, absolutely love my girl Mavis, went on a rampage over the period of a pretty decent amount of time. And I haven't been making videos on other stocks here on YouTube because my primary focus has been AMC, as that is where the majority of people have their money right now. I get it, right? That's the majority of my subscriber base, so I try to give you guys what I think is important, right? But in my Discord, we still talk about other stocks. And even though Microvision is a long-term stock for me, if stocks run up a crazy amount and you have fear that you're going to lose some of your gains, it's okay to take gains out of your long-term positions and reestablish them at the bottom, because you can buy more shares. You lock in that realized profit, which is absolutely massive, right? And you want to make sure that you're not getting beat out by this inflation that I think is going to be coming down the road. Do I think it's going to happen in 2021? Probably not. I think that the Federal Reserve is going to keep kicking that can down the road as long as they possibly humanly can, but eventually it's going to catch up. $10 trillion is a lot of freaking cash. It's a lot of liquidity. Eventually, it's going to catch up with the American economy, right? So make sure that you're basically being careful about your bets. I shouldn't even say bets, your investments, and managing that risk, because it's going to play a factor in the way that the American dollar is worth something here down the road. And what's freaking fascinating to me is I think that AMC is going to be a catalyst that causes a really harsh bear market after everything takes a crazy turn. You know, when hedge funds start getting liquidated, when you see some really bad losses, the squeeze stocks start moving, the blue chips get liquidated, they take some big hits, right? It's going to give you an opportunity in a bear market to buy some stuff for really cheap. And then not only are you beating inflation with this, by the way, because when you make your freaking, 500, 1,000, 2,000, 3,000, 4,000% returns on AMC, you're way beating inflation. You're beating inflation like to the freaking teeth. You should be jacked in the teeth with how bad you're beating inflation. Like the money you're going to make from that compared to the rest of the market, which is going to, and this is all hypothetical, right? I can't tell you exactly what's going to happen. But if AMC plays out the way that all of us are imagining, right, all the research that's been done by apes out there, you're going to be sitting in a pretty good spot. So after AMC is over, exit strategy and management of wealth and liquidity is going to be a really important factor that you want to pay attention to. I mentioned it before, but once we get closer to the day in which AMC is going to squeeze, I'm going to put out a video talking about, exit strategy, and then I want to make a video talking about what I'm going to do with my money and what I think is, personally a good idea to manage wealth in a good way. So think about people who win the lottery, right? People who win the lottery, I don't know the statistic, but it's something absurd. Most people that win the lottery end up going broke again. It's because they don't know how to manage newfound wealth. And that's a little bit of what's scary. Not so much that people aren't intelligent enough to manage wealth, but that people don't know the questions to ask, It's like if you're used to living on a $10,000 a year salary and all of a sudden you have a $10 million a year salary and you don't know anything about managing a $10 million a year salary, you're going to be sitting in a different position, right? You might not manage that wealth in the right way. And that's no ding on anybody. I probably wouldn't know how to manage $10 million. I'll tell you that right now. Like, I don't make $10 million a year. But you get my point, right? So the two big things that I want to drive home with this is, like, I do think inflation is going to go up. So when AMC does make its move and other stocks, I think inevitably get, margin called liquidated, you see some really big blue chips take hits, make sure that you're managing your risk, you're locking in some profits, and you're being smart with your capital, because I don't want you guys to get beat up by inflation. That is going to be the biggest kick in the nards that is humanly possible. So that's kind of what I want to talk about in terms of that. And then lastly, I want to talk about the technical analysis on AMC. Now, I've talked about this stuff in the past, but I want to, bare bones, give you exactly what I look for in terms of technical setups so that you guys can do this yourself. So there are three main indicators that I use, and that is this blue trend line, this purple trend line, and this is the RSI, which is a relative strength index. Then I pay attention to volume, and then just pure candles. I know other people use the MACD and some other indicators, but I keep it bare bones minimum, because I think of it like this. These are the foundation. This is 90 to 95% of the mountain, and all the extra tools are the extra 5%, the tip, right? So the majority of retail investors don't really need that tip as much as they need the foundation. So let's establish that first, right? 15MA is this blue trend line right here. It's the moving average. It's a 15-day price action based valuation trend line. It's a lagging trend line that gives you an idea of the microscopic price action on a stock. It tells you what has happened so you can predict what might happen in the future. And then this 200 EMA, this purple trend line, is the exponential moving average. This is a price action based valuation trend line over a 200-day moving period. If you wanted to set this up in your own Webull account, I have a link down below if you want to check that out. You get 2 free stocks with a $100 deposit. If not, I don't really care. You can do it right here. So you just click on this little indicators button, then edit indicators, and you turn on EMA, you turn on MA, and then I also use the VWAP, but that's for day trading, not as important. So the EMA right here, you want to go to length and to press in 200. That's 200 days. MA, you want to come down here and type in 15. That's 15 days. You can change the color if you want. Styles right here as such, right? And then the RSI, if you want to turn that on, is just, edit indicators, all indicators. Where is it? Well, it's in alphabetical order, so here it is, RSI. So if you want to turn on RSI, that's right there for you. You can also change the length period of time on these as well. I only use the 14-day RSI. That's the time frame that I use for that. You can set it to whatever you want to do, but that's what I find works best for me is you get the most actual volatility in terms of the prices, the stock's price action, right? So what do I look for in terms of these specific indicators and the volume, right? So if I was to look at this on a 1-month trend line, one month chart, which I am right here, right? Let's just look at what we got here. So there are important things that tell you when a stock is bullish and when a stock is bearish, right? So one thing in particular is when you see the 15MA cross over the 200 EMA followed by or prefaced by a bump in trading volume. Now, what does this mean? It means that the 15-day price action, the previous 15 days of price action is more bullish than the previous 200 days of price action. If you get 3 things, right? You get this crossover, you get an unusual bump in trading volume, which we got right here, and a news catalyst that is sustainable over a long period of time. This can be indicative of an upcoming bullish run. On the flip side, right? If you have the 15MA that is about to gap underneath the 200 EMA, this is usually a sign of an upcoming bearish run, right? A little bit of a sell-off, and I would say a hyper-inflated sell-off, right? So like you see here, right? 15MA crossover the 200 EMA, you got that bump in trading volume, and we went on a 4-day run right here, right? That tells you that, hey, I can anticipate that we might have a potential run. It doesn't always happen. You can see right here, right, that it didn't follow up, but it also was prefaced by a huge bump in red volume. So that's not a great indicator, right? You want to match this up with green volume. So that's typically a really, really good sign. You want to match it up and make sure that it's not, being... You need all the boxes, right? Because the more, I should say, confirmations you can stack, right? That 15MA crossing over the 200 EMA, the volume following through, the news catalyst following through, the more you can have, confidence in the fact that the stock is going to run. So continue to stack up those boxes, right? 15MA crossing over, you've got a bump in green trading volume, you've got a news catalyst that is sustainable. Maybe it's like an interview, maybe it's they announced they're going to acquire a movie theater, maybe they announced that they're going to release the data from the share recount, which, by the way, I don't have any information on. I did email Adam Aaron. I'm waiting to hear back. I haven't heard anything, but it's something like that. Sustainable hype that can drive a price, a stock's price action over a sustainable period of time. So, look at the chart setup right now. What do we have? What do I think is important at this point? Right, so we talked about the volume, why this is important, right? I like seeing that bump in volume. I like seeing an uptrend in volume. You can typically see the uptrend in volume more so on the daily candle. So if you just come down here and press day, that'll give you a better indication. But you want to see an overall uptrend in volume, right? So if you came back here, you could have got a really good indication that there's going to be a nice run because you had an uptrend in volume. If you change this over to, let's just do the 1 month and I'll scroll back. But I'd be willing to bet you that 15MA and the volume bump happened. So like right here, you see it, right? 15MA gap, it doesn't always even have to cross. You can just gap up, right? So the 15MA gaps away from the 200 EMA right here. You've got this unusual bump in trading volume. It even happened way back here. So if you took a stab at it back when it was trading at $2.64, you could have still made some stupid fat cash, right? 264, you get this unusual bump in trading volume compared to the previous days of price action, right? 15MA crossed over. And then for the next freaking week straight, went on a stupid bull run, right? And it was sustained by the news catalyst, which acted as Wall Street bets talking about GameStop, which led into the Wall Street bets talking about AMC. Now, the same thing can be said about what's going on here, right? So we've talked about the volume. We talked about the 2 indicators that I like to use. The RSI gives you an idea of when a stock is overbought or oversold. The RSI, anything over 70 is typically overbought territory. This is when you like to sell a stock. And when RSI is down at 30 or below, it's usually overbought is what I meant to say up here. Oversold is underneath 30, right? And this is typically when we want to buy a stock. Now, if you look historically at the trend of AMC, it has some really harsh oversold territories, right? And this is giving you an idea of the previous price action, so we can take a guess at future price action. So we've seen that it's gone as low as 19 here. It's got as low as 19, 20 here. It's got as low as 26 here. And then we went on a couple days spree where it touched down at 30, it touched down at 30, and it bounced and it bounced. If it continues this trend, we could anticipate a little bit of a bounce off of this 30 RSI, which could indicate that we get a little bit of a reversal tomorrow. But that's just one confirmation, right? If you look at this in another sense, we've got a descending level resistance. This is purely looking at it in the sense of, okay, these are candles. We can see that this is a hypothetical level, an artificial level that can't be breached for whatever reason. And if you get a break over this, you can see that 15 MA hook back up. RSI starts to hook back up. You get green volume that follows through, which would lead to the 15 MA gapping away from the 200 EMA, right? So it's a whole bunch of different things that you're looking for in terms of what is making a stock bullish. So kind of to recap all the indicators, right? RSI, you want to see that bounce off this 30. This is typically the time that you want to buy for a stock, right? For a swing trade, for AMC even, right? Any sort of stock. That's when you're looking to buy for a good position. You want to see that 15 MA gap away from the 200 EMA. You definitely want that in good bullish territory. You also want to look at, we're going to talk about briefly the candlestick charts and the patterns and stuff. And I think this will be the best noticeable on the 1 day, right? And all these things are applicable on any time frame. You can use this on a 1 day chart, on a 10-day chart, on a 1 month, a 3 month, a 6 month, a 1 year, a 5 year, any time frame. These all apply, right? It's just different time zones. So if you use it on a larger time scale, it's just more applicable for a larger time scale. Smaller time scale, it's more applicable on a smaller time scale, right? So for instance, right here, you've got the 15 MA that hooks underneath the 200 EMA right here, which indicates that, hey, we might see a little bit of a sell-off, and it did in fact come to fruition, right? You also see that we're trading underneath the volume weighted average price, which is this gold trend line. This is the average price that somebody paid on the day. So if we're trading underneath that, it means that most people that bought are bag holding on the day. If we're trading above it, it means that most people that bought are green on the day, right? So, you stack all these sort of things, and we can move into what I'm talking about here next, which is the overall, candlestick patterns. So let me delete this really quick, all the drawings that I've got on here. And I'll show you what I'm talking about. So trend lines is what I'm going to touch on here, and then in future videos I'll touch on some other stuff. But trend lines, right? So what do you see here? You can see that we've got a level of resistance. Resistance and support is super simple. I know that most people understand this stuff, but if you don't, we're just going to assume that there's at least one person who does it. So resistance is when you get at least 3 touch points on any artificial or synthetic level that just can't be crossed. And you get it here, right? 1, 2, we'll adjust this here just a little bit. 3, 4, 5, 6, and when you finally get a hard break over that, you can signify and assume that you're going to develop a new trend, right? So at this point right here, we have developed a new trend. Now, what is that? It's a little bit of an inverse head and shoulders pattern, right? Now, what does that mean? It means that you've got a neckline right here, such as this. You get 2 touch points. Touch, and a head. So here's the head, here's a shoulder, here's a shoulder. Typically, when you get a break over this, as long as it's not a false break, which we've got right here, you get a nice bullish run on the horizon. And this is what I was assuming people were playing for right here. That's why you get this bump in trading volume. They were trying to get back over the volume weighted average price. They're trying to get over this neckline setup, and it just didn't come to fruition. So we ended up maintaining this overall, consolidation phase right here. So candlestick patterns, if you want to play it super simple, play trend lines, connect dots. It's really that freaking easy, right? So look for 3 touch points to signify any respective level of support or resistance. And you can see that we got that right here, just about, right? 1, 2, almost 3 touch points. But if you get a third bounce off that, I would say that it's a signified level of support on the 1 day, time frame. Looking at the 1 month, right? Let's just, do this on a 1 month. We can show you another example. So on the 1 month, you can see we had a level of support for the time being. It was very extended support, but nonetheless, it was being respected. You can see that every single time it touched this trend line right here, it bounced off. You get at least 3 touch points, 1, 2, 3, 4, 5, 6, 7, 8. And it doesn't need to bounce exactly off, right? It's an overall trend. It's an art, not an exact science. But this is what you're looking for, right? So you do the same thing with support and resistance. They can be horizontal, or they can be trending up or trending down, ascending or descending. Either way, that's all that you're looking for. It's really that freaking simple. 3 touch points to respect any level of support or resistance. If you use these specific pieces of technical analysis, the 15 MA, the 200 EMA, pay attention to volume, pay attention to the RSI, and pay attention to overall trend lines, candlestick patterns, right? You are going to be set. You're going to be able to read 90% of what AMC stock is doing on any given day. And now that I can't live stream on a consistent basis because of my 9-to-5 job, you'll be able to monitor what's going on with AMC stock. You can apply this to freaking anything, right? So, like, for example, let's pull up Microvision. I'm going to show you what I'm talking about here with Microvision, right? So Microvision, this is another stock that we talked about on my Discord. I brought it up on the video, a couple days ago. I said if you have Microvision stock, it's pretty likely that we see this sell off. It ran up a crazy amount. A stock that goes up 200% in 4 or 5 days is very likely going to have a sell off or a correction, right? Ended up happening. So what are you looking for right now with microvision, for example? You're looking for a break over this descending level of resistance, right? You got 3 touch points, 1, 2, 3, almost 4, but we'll count that 4, right? You want to take the most recent price action, so we'll just move this down here a little bit. But once you get a hard break over this descending level of resistance, you can expect another little bit of a bull run. And I will show you an opposite example, which is this. So this acted as support in the past, right? You get 3 touch points, 1, 2, 3, 4. You get a wide range candle bar, which is a candle that covers a lot of price action that breaks beneath it, and that ensues an upcoming sell-off, right? So if you were to use these two, support and resistance trend lines at any given time, you can predict a lot of what's going to happen down the road, right? And then after a break over this descending level resistance, where's the next level of resistance going to be? Let's do a horizontal one. We'll drop this a little bit here. 1, 2, 3, 4 different touch points right here. So after a break over, if it happened tomorrow at 1750, next level of resistance would be at about $21. Now, I'm not telling you to buy or sell microvision right now. This is a long-term stock in my portfolio, but it's an example, right? Now let's look at Mara, another example. Mara is a fascinating stock because I think that it's going to have a nice bull run coming up soon. And it's because you've got the 15 MA that's starting to hook back up towards that 200 EMA. It had a little bit of a hook down here today, which indicates that the 15, days of price action, the last 15 days, is a little less bullish than the previous 200. But I do anticipate you're going to see that 15 MA start to hook back up towards that 200 EMA. Why is this? It's because you see that the candles are starting to move up towards that 15 MA. If you're trading over the 15 MA or the 200 EMA with the candle price action, that indicates that you're in really good bullish territory on that given day. So if you see that these candles start to hook up and cross the 15 MA, I would anticipate the 15 MA will cross back up to the 200. You'll get a nice bump in green volume, and you can expect a nice bullish run upcoming in the future, right? Now let's look at support and resistance levels. So right now, a good trade on this would have been if you saw the beginning of an inverse head and shoulders pattern. Head, shoulder, and you can assume that the next shoulder was coming right here, right? 15 MA starts to hook back up. You could take a position, at $28 if you want a confirmation of a good bottom. You could have taken it at 32 once you see that head start to form, right? You'd still be sitting pretty good right now. And a break over this level of resistance right here at the neckline is going to indicate a really nice bullish run. And why do I say that, right? You've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 different touch points all the way back to March 10th. So you can use both previous support lines and resistance lines as a equal respected level. So you're watching for a break over this level of resistance right here at about $37.74. And once you get it, you're gonna expect a really nice, clean, bullish run, right? So that's another great example of what you're looking at right here. And on the flip side, you've got a level of support, right? You can see this respected level right here of support that has 3 touch points, 1, 2, 3, 4, 5, 6, 7. I'll say 7, right? So 7 touch points in the previous, let's say 1 month, little more than 1 month, right? So this is acting as a level of support, and you can anticipate that the stock will either bounce off of this, or if it breaks it, move really hard for the downside. So, I just wanted to give you guys a couple different examples of walking through, the different touch points that I'm looking for in terms of technical analysis, what looks like a good trade, what looks like it might sell off, X, Y, Z, and you guys can plug this into freaking anything. So hopefully, I try to make that kind of quick, kind of just touching on a lot of different things all at once. Hopefully you found some value in that video, and that's what I've got for you guys today. So if you enjoyed the video, drop a like, blah, blah, blah. Consider subscribing if you want to. You know the whole spiel. That's what I've got for you guys today. So thank you for watching, my friends, my family, and my fellow Gorilla Gang. Peace and love. Later.